Welcome to the Movers and Shakers podcast, where real students are doing real deals in the world of multifamily real estate. I'm Vince Gethings, the owner of the Wheelwell Profits Academy. Listen in as we dive into the journeys of driven individuals who are turning their dreams into reality. These people are just like you, taking action and making things happen. If you enjoy the show, please like, subscribe, and if you're ready to take action, check us out at wheelwellprofits.com to learn more about our incredible community. Let's get started.
This is Movers and Shakers, where we interview the upcoming generation of Make It Happen multifamily investors to share their story.
Welcome to the Movers and Shakers podcast. My name is Gino Barber, a co-founder of Jake and Gino, multifamily investor, educator, father, mentor, and I'm joined by my co-host, Josh Rusin, community director of Jake and Gino. Josh, how are you doing?
Gino, doing well today, man. Super excited. We got a lot of things happen. Students quitting their job, going full-time multifamily real estate, taking down deals, touring units with brokers, just a lot of MIH going on in the community. Gino, how about you? What's going on in your world?
Same thing, Josh. We're busy down here in St. Augustine. The weather's still nice. I'm still going to the beach, still riding a bike outside. You know, people in New York, it's in the 50s. So feel sorry for them. It's just too bad. You got to get up and you got to move, right? We have a great guest today. It's going to be a lot of fun. We're going to need a lot of knowledge today. Josh, introduce the guest. I want to get this thing going because there's a lot of knowledge in this show.
Yeah, speaking of today's guest, we have Mike Taravella. So Mike graduated from Michigan State University in 2014 with a Master's of Science in Accounting. He has worked 5 years professionally in accounting. He started at Ernst & Young in public accounting and then transitioned into Detroit's startup community at Rock Ventures. He began his real estate investing career in 2016 by owning and self-managing investments in Michigan. He also took an interest in real estate development before joining Rand Partners this year. Mike is currently the asset manager responsible for underwriting deals, investor relations, and also asset management. Welcome to the show, Mikey T.
Thank you, Josh. Thank you, Gino. Happy to be on here at Movers and Shakers and happy to talk to all our listeners today.
Yeah, Mike, so I want to get into your story. So you go to college, you start with accounting. What initially attracted you to accounting?
So I was really good at math in high school, and I knew I had a path of continue with math or do business, and I sold out and did accounting. And my math teachers in high school were, "Why are you doing this? You should get your PhD in math." I didn't want to be a math teacher because my mom's a teacher, and I knew how hard they worked, and I just wanted to work in business. And I knew accounting was the language of business because you have to have accounting in every business. So from there, it just grew and grew and grew on just picking up and learning and networking at MSU. And from there, I had an entrepreneurial venture. So I realized I kind of had a little bit different path of owning my own screen printing business. So I knew I had a little bit different path than kind of the different corporate of stay at this firm for 5 years or 10 years, get promoted and go up the ranks. I just knew I had a slightly different path that I wanted to follow. And eventually I found real estate after graduating. So that was kind of the reason in accounting and how it led to my entrepreneurial journey.
Well, let's unpack that one for a minute. So you're in accounting. What made you decide to open up an entrepreneurial venture of screen printing? Where did that come from?
So we saw a lot of people at Michigan State making tailgate shirts, making shirts for dorms, you name it. So we realized, hey, we could do this ourselves. So we actually went to Central Michigan to pick up our screen printing press with all our roommates. And we decided, hey, we could do this. We bought a press off Craigslist for $900. Started small by doing our local softball shirts, worked our way up to getting fraternity shirts. So in a weekend, we made 500 shirts in a weekend, all the way up to working our accounting department shirts and local businesses. So it was cool to see the evolution of it growing and how we could take nothing and make something out of it and learn and grow from there. So it was cool seeing the whole start from Craigslist ad to doing business with the Michigan State University and other organizations in Michigan.
Mike, how much do you think it would cost to get a PhD in mathematics?
A lot. Absolutely a lot. I couldn't even put a price tag on it.
Okay, so that my next question is, why would somebody tell you to get a PhD in mathematics, go teach, and barely be able to pay back those student loans? Like, where's the logic in that? Is that why you just said, I ain't doing that?
I just think where I grew up in, everyone was play it safe. So do accounting. It's a good job. Everyone needs it. Everyone needs teachers. And so the mindset, the limiting belief is get a safe job. And until I got to college, I realized where you can have unlimited earning potential through wealth creation with real estate and other investments. So it was just a limiting belief. My whole family worked at Chrysler and were get the safe job because you never know what's going to happen, or they were teachers. So there's only two avenues, and I was just kind of the black sheep who did my own thing and found a way to make money doing other than a W-2 job.
So you said your mom was a teacher. What turned you away from the teaching profession?
She earned, so she's a single mom raising me. She earned 2 masters, and she teaches at a local high school. And I get my work ethic from her, and I just saw how hard she worked just on the old digital typewriters. She's an English teacher, so she's constantly reading books after books on top of teaching every day. And so the teachers getting the rep of they're off at 2 o'clock. I've seen it live, and it's definitely not the case because you have to kind of constantly get educated, and it costs money, and it's not high paying jobs. So I just realized that for how much I'm going to work, I'd much rather be in control of my own career going forward. So teaching wasn't it for me.
What do you like about accounting?
I definitely love that numbers aspect, and the numbers tell a story. So every month we get financials with the income statement and the balance sheet, and the numbers do tell a story once you understand the patterns, and it's the true language of business. Because if you have less revenue than you do expenses, something's not right. So you have to go in and dive into each number and analytically figure out what's going on. So the numbers don't lie. They tell the story of your business, and it's okay. And I've seen it from large businesses in my auditing career, and I've seen it in the small businesses with my startup and working with the startups in Detroit under Dan Gilbert's community.
So numbers are not like sellers. Sellers lie, numbers don't. Is that correct?
I mean, brokers try to lie with off-market, truly off-market, light value add, and you see their pro formas. And working with the students, I even tell them the offering memorandums it's a selling document. It's not the T12. It's not financials. So it's the financials is what you got to really look into to understand what's going on in the business.
So let's walk through how we underwrite a deal. What are the things that you look for in the beginning? That offering memorandum is great, but what are the things do you look for before you do a heavy lift? I mean, I don't expect people to do a complete underwriting on a deal that may or may not work. What are the parameters that we look for before we start plugging everything into an underwriting template?
Absolutely. So before we even get into the template, we look at the big picture of the market. Does it have growth in population? Does it have job diversity? Does it have strong economic indicators and path of progress? Does it have all those things to make sure it goes? So if it has that, then we check the submarket. We check the median income for that tract to make sure it's within our threshold. Anything 35 to 40,000 is generally our cutoff, depending on path of progress. But anything lower than that, we found isn't a great area to invest in because it just has hairier tenants and it's not quite our cup of tea. And then lastly, you get down to the deal. So if it has all those things, we're looking at the deal. Does it have the ability to add income via rents or other income? Other income we've seen with a lot of the students in the community, they try to cut expenses and you can only get so far, but you have that ability to increase other income through pet fees, application fees, move-in fees. Living in Chicago, it's a huge story I tell people is that security deposits in Chicago, if you don't pay that 10 cents of interest because it's bonded, you'll get sent to court, have to pay 3 times the security deposit, all over 10 cents, and pay the court fees. So it's really cool to see the students spinning their head when it comes to how to generate other income in that aspect and really help their underwriting going forward.
So how has deal flow been since you got to Ram Partners and what is, I guess, exciting for you to underwrite?
Yeah, so it helps the first week we landed a deal in our Lexington deal, so it was a good week to start. But deal flow it comes and goes. I think with our current market and cap rate compressions, it's tough to find a true deal. But I think it's exciting to get on the hunt and find the next one. So constantly calling brokers, building more relationships, being on LinkedIn, Facebook, just putting ourselves out there to make sure that we have enough relationships that brokers, one, trust that we can close and be able to purchase. So we're quick with it, and we're just constantly on the phone, emails, communicating with brokers, underwriting to make sure so that we can find the next deal for our investors.
Mike, let's talk about that. What are the best ways to form rapport with a broker and build those relationships to get those true off-market or pre-market deals?
Absolutely. So first off, you have to build credibility. So understanding that with us, we have 1,500 units in our portfolio. So our track record speaks for itself. But someone starting off, they might not have that track record, but they should find that track record with the team that they have. So I'm partnered with someone who has X amount of units, or they've been investing in this many years and have this many assets under management. So one off the bat, you have to prove credibility to close, because if you can't close, you're wasting the broker's time. And also another key point is be brief with them, because they're super busy, constantly getting phone calls. So just making sure that your calls are pretty brief and you have a minimal understanding of what you need. We don't try to bucket ourselves too thin, because then you won't get as many deals. But with us, we discuss anything over 100 units in the markets, 1970s or older, 1970s to 2000s, generally what we look at, but we can kind of expand the gap just to make sure we understand what we're looking for. So being concise and having a credible background to help you close deals.
So when you underwrote that Lexington deal, what was attractive about the deal? How did you know that it was like a winner for us?
Yeah, so kind of going on the market, Lexington, all the brokers say the urban service boundaries. So it's all the horse farms, so they can't build anymore. So that was an interesting piece. In that sub-market, the median tract income was $50K, so a little bit higher than our minimum threshold. And it had an outdoor mall across the street from an indoor mall, and around the corner was a suburban area where it had high-end retail, Cycle Bar, Whole Foods, all the brand new bars in town. So that sub-market checked the box on all of those. And lastly, we saw a lot of the rents in the area could be increased in that market. And even in our due diligence, we saw ways that our property management company can come in and put the RAND property management touch so that they're exceeding expectation of our residents and getting that premium service while getting market rents for it. So we felt on all aspects that we could true value add deal that we can learn and grow from.
And Mike, that deal did not fall in our lap, did it? How did that deal come to us?
No, so that deal came from an existing broker relation, walking a ton of deals with him, trying to find the right one, and he truly gave us a true off-market deal, not just the ones they say about with an OM, but a true off-market deal, building a lot of relationships, taking a lot of calls, and looking at a lot of deals with the brokers. So it takes a lot of time to foster those relationships and show that you're truly credible in the space.
I think this is an important question because I get it from a lot of students. How do you stay credible with the broker when a deal's priced at 10 million and you can't go above 8 million? What do you do, Mike, to tell the broker, I like you, this deal is horrible, it doesn't work, you're 2 million off, but I still want to put an offer in? I mean, and I know we've been up against that a lot, and it's just not the students out there, but that's the environment right now. And part of the framework, the 3-step framework, is buy right, manage right, and finance right. The buy right is crucial because once you buy a deal, you can't go back and unbuy that deal. So it's very important to do that. So what do you tell the students out there? Hey, you got to put in the offers.
Yeah, I mean, you can't land any properties if you're not putting in offers, but I would just preface it when talking to the broker. Hey, I know this is really off and we want to be respectful to the seller. But usually the broker on that other end is going to say, hey, just submit an LOI in just to get it in and we'll see what happens. So just prefacing it with that, hey, we know the whisper's here, we're down here, but we just want to make sure that we don't want to be rude to them. And you can point to don't show your assumptions, but say, hey, our assumptions are a little bit off because, we don't see a rents could get this high, but just give them a little something so they can go to their seller and let them know. But communication is the key, and just being transparent and letting them know what their expectations. Because the last thing you want to do is go, we're submitting an offer and it's super low and they don't really understand why.
Well, it's important to have that rapport with the broker, isn't it? To let the broker know what you're looking for. If he's bringing you an A property and you're looking for B's and C's, that's already off the starting point is incorrect. Also, letting the broker know that I have certain assumptions, I have to hit certain criteria. Also, speak to that. Like, how do you talk to the broker about what we're looking for?
Yeah, so it's constant communication and transparency. So we just had a broker yesterday send us a deal. I wasn't familiar with there, but I was like, hey, let's check it out. And then I went through and was like, hey, it's no because this, and this. And he respected the fact that in 10 minutes I can say no because X, Y, Z. So if you have your criteria built on the front end and you communicate it quickly, then you're not wasting the broker's time. They respect you even more by being able doing your homework already in the front end. And even if I'm not fully aware of an area, I've never heard of it, I can quickly go through our checklist and go, no, because it's too old of a build, median income, or population growth. With our online tools that we use, super easy to quickly check and get back to the brokers.
Mike, you said something that's very important there. You said react quickly. And I think in this type of environment, it's very competitive out there. You need to get your underwriting over quickly to the broker. Once the broker sends you something, you need to get quickly. Let's speak about that real quick because
Yeah.
because it's important to like you said, build a rapport, do as you say as you do. Do you think people are doing that out there, or they're just taking time? And that's the reason why you want to underwrite as many deals as possible, but you need to get back to those brokers quickly, don't you?
Yeah, and when I first started my multifamily journey, it was that limiting belief of, oh, I have this time, or this isn't right, I got to double check 10 more times. And so even if you just throw an LOI out there, it gets you in the game. And that's the biggest thing you got to do is get in the game and make sure that you're executing on it. And obviously you got to follow the principles of buy right, finance right, manage right. But if you did all your homework and you have all your attributes and your criteria that you need, and it checks all the boxes, submit an offer out there and see what happens. Because then there's going to be a final invest and there's a PSA. So at least get in the game by submitting that LOI.
It's something that you said a little while ago, that word Serban. I think everyone get your pen and paper out, write down this book, Big Shifts Ahead. We had just podcasting Chris Porter, who co-wrote the book, and one of our other podcasts. It is an amazing book on, the word is demography. He's a demographer, and he's talking about demographics, and they coined the word suburban, which is really cool. A lot of the cities in the Southeast have this. It's a suburban area just out of the urban core, and there's a lot of mixed retail, mixed use, apartments. And, Mike, speak to that, because I think that's the new burgeoning area where millennials want to live, where baby boomers are selling their homes, they're retiring, they're renting these apartments that are right near the core of the city. And it's still out of the city where you still can get some good type of schooling. So public schooling is still good. So speak to that a little bit.
Yeah, people are sick of cold weather. People are sick of paying high taxes. So they're moving down to warmer climates. And then in these suburban communities, they have all the amenities you need to live. So you have your grocery store like Whole Foods, you got your gyms like Cycle Bars, Orange Theory, all the other gyms. You have the top-notch bars and places where people are going to go after work, on the weekends, etc. So people don't have to drive, and if they do have to drive, it's an Uber away, super short commute. So literally everything is getting condensed into these smaller areas, so they're more hubs where people are going to and can have all aspects of life in one stop.
Mm-hmm. I love that. Mike, when we took that Lexington deal down, what did you learn about the due diligence process that you didn't know that you can share with the listeners?
Yeah, I think the due diligence process, every property is different, and there's always going to be some sort of headache or speed bump that you got to overcome. But it was just interesting to see how other people run their properties. So we just talking to the leasing agent, we saw that they weren't answering the phones because that person was mean. So it was just night and day difference of how ran property management and our team takes care of business, and just the organization of being organized. So it took us a while to get some files and just you name it, and just the expectation. There was like leaks in the office bathroom, and we let them know, and then so they just mopped it up. So everyone takes care of their properties different. So when they say deferred maintenance, make sure you're on the same page with deferred maintenance and what that means to you and what it is there. So it was just a cool piece to see other people's and what they mean. So when you see the offering memorandums, they see those expectations and those dollars, don't take it to truth, 100% truth. Do your own homework on it to make sure it's truly up to your standards.
I like that. Before we take a quick break for the listeners, what are you excited about working on right now? What project we have going on right now?
We've been trying to find the next deal, and we've just been working on that. We've also been working with our working primarily on the reporting side. So we're just trying to make sure we're getting constant reports out to our investors so they can dive even deeper. We do the monthly webinars, but I just want to make sure that they have even more reports to brag about our reporting, and our investors take pride in that. So we just want to make sure we're exceeding expectations on the reporting side as well.
Let's take a quick break to listen to our sponsors.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created. Buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply.
All right, Mike, I got some short answer questions for you here. So, all right, you're 27, you're making it happen. Let's say I'm new to multifamily and I'm trying to get into it. What's your best advice for any listener in that position?
The best advice I'd have is educate yourself and network with people who are doing it. I think the Jake and Gino community, get their book, network with their people, join the community, because it'll teach you how to do it, and it'll put you in a world where not many people understand right now in your network. But if you surround yourself with people who are doing it every single day, it'll elevate your game to the top notch to get you there faster.
Mike, I like that answer, and I want to dive into that for a little bit. So when you talked about earlier, when you were venturing off, you became the black sheep of the family, right? I realized the same thing early on in my career, taking advice from my parents, although it may be good advice, it was going to lead to the position they were at in life, and nothing is wrong with that. I just had more ambitious, goals in life. When I started taking advice from people that had the results I wanted, were on the same path, learning from the same systems and tools, this whole world became a lot more normal, and I wasn't the black sheep anymore. So I like that a lot.
Josh, you're still the black sheep. Don't worry about it. I love you, bro.
He's the loud sheep.
Mike, what's your favorite book you've ever read and why?
I think it's got to be the Robert Kiyosaki Rich Dad Poor Dad, because as an accountant, he says this isn't the accountant's way of how to look at financials. So I'd say the Rich Dad Poor Dad has been kind of opened my eyes, to be honest, on how to make money, how to look at money, because I was so ingrained in that accounting framework that I couldn't see anywhere else. So that book just opened my eyes on the possibilities I had with money.
Mike, no offense, but accountants probably make the worst investors ever. I think them and lawyers make really terrible investors because they stick to a certain framework. They look at the actual numbers and they don't get creative. I don't think they have that investor mindset. Do you think I'm right or wrong in saying that? Am I just making a generalization? Or because I've spoken to a lot of accountants and they're great at what they do, but when they step into the investor, the entrepreneurial space, it's a completely different way of looking at a deal.
Yeah, so they've had drilled into their head for at least 5 years of education of be conservative, be conservative, be conservative. So you always find what's wrong with the deal. Mm-hmm. So they're always good at helping with the PPM of what could go wrong versus the upside. And even I struggled with this in mind, is just it can't go that high. It can't go that high. Just lower the numbers so it's a little bit lower, and you're underwriting yourself out of the deal. So I agree for the most part. Obviously, it's a generalization, but, it just takes – you got to show the upside and how you're going to build it out. So
It's important what you said right there. If you're looking for something to go wrong or something not to be right, you will find that. I mean, you will train your mind to do that. I give a great example of being a police officer. Police officers are trained to look for bad guys. So they're always looking for bad guys. And that's what they end up seeing, right? So it's the same thing with accountants. If you're trained to look for the downside or for numbers to be wrong, instead of like, hey, there's a possibility. So I think all they need to do is surround themselves with people who are like-minded investors, learn how to underwrite these deals, and there's going to be an opportunity out there in the next 12 to 24 months because things are going to compress. The economy is going to slow down. Hopefully, everyone out there has chosen the right market to be in, and you get that deal flow. You want to start networking with the brokers now because there's going to be a lot more deals coming online in the next 12 to 24 months with interest only burning off these 3-year terms, and rents haven't gone up as much. So there's going to be opportunity in the next 12 to 24 months.
Yeah, and to stress that too is just making sure you have the right fundamentals, because you can talk yourself into a deal, but if everything before it is garbage, it's an easy no to just say no. So make sure you have strong fundamentals going through that deal and market.
Wow, well said. Mike, what's your best habit for success?
My best habit is just reading every day. I've been up and down on that, and I found myself when I'm not reading, I'm not learning, I'm not growing, and then I get in the spiral. And also to exercise. Before I was 80 pounds heavier, just getting in my head, and it just wasn't a good healthy lifestyle. So if you don't have your health right, your mind right, it's just a disaster. So just reading, running, and just getting mind and body right.
Well said. Gino, this podcast has been full of useful information. You want to sum it up for the listeners?
What Mike ended up deciding in his life, he had clarity. I think that he didn't want to be a teacher, which is great. That wasn't his path. He became an accountant. I think that wasn't his path either. I think ultimately he loved multifamily. I think the next step was becoming clear on how to get there as quickly as possible. He saw an avenue to be able to work with others who were doing it. He liked the culture of the company. That was really important. He's a make it happen guy. He doesn't talk about enough on how hard he works, because that is the key to it. You can surround yourself with a lot of people, great people, but if you're not putting the time and the hours and the work to learn, you're not going to get the results out there. Work hard, work smart, and work with passion. That's the trinity of becoming financially free and having a great life. And I think Mike is doing all three of those right now. I don't want to put words in his mouth, but I can see that's what he's going towards, and he loves it. And I'm making another joke about accountants. Mike's got a great personality. Accountants sometimes a little bit dry, so Mike likes to shake it up and mix it up a little bit. So
I get that a lot. I don't know why.
We're making too many generalizations now. I love the accountants. And that's the thing. You need a great CPA on the team. They are measurable with the skills that they bring. They help with the taxes. They help with your planning. They help with a lot. And like Mike said, it's really all about the numbers. Don't fall in love with the property. I've done that so many times. Fall in love with the numbers first, and then if the numbers really work, let's take a look at the property and see if the property works. I think that's what I've really pulled out more than anything, Josh. And like I said, just become clear on what you want to do. If you want to become a PhD in mathematics, just chart that course for yourself. Make a logical decision. Is it worth getting $300,000 in student debt to make $50,000 a year? I don't know if that is or that isn't. Just make that decision for yourself. And the journey of an entrepreneur is amazing. Every day is different. You come up with new challenges. Deal flow, hiring people, putting offers in. Are we going to get the deal? And the process is great. It's all about learning. But I think once Mike has done one or two more deals, it's going to be like clockwork. I mean, there are differences, but you're going to see the underwriting gets to be simpler. Every time you do underwrite another deal, it becomes easier. So just continue to put the work in, find something you love to do, and surround yourself with people who are doing it.
Wow, love that. To add to it, what I've seen, Mike, here, some of your keys to success here. When you saw opportunity, you jumped on it. Your mind's thinking like an entrepreneur. Example, there's the t-shirt shop. Also solving problems. You're like, hey, accounting, what I'm doing is literally looking for the issues and how we can improve it. Adding value to others has got you where you're at. And then surrounding yourselves with like-minded individuals. I definitely think those are some of your keys to success. Anything to add to that, Mike?
I couldn't agree more, and just keep working. And like Gino said, just keep working hard and good things will happen and the universe will reward you.
Love it. Hey, Mike, how can the listeners get a hold of you?
Yeah, so you can find me on LinkedIn at Mike Taravella Jr. You can also email me at mtaravella@rampartnersllc.com, or you can go on rampartnersllc.com opt in the portal, and we can definitely connect on the calendar, answer any questions you might have, brand partners investments, or any questions you have.
Guys, I want to thank Mike for being an amazing guest on the show and sharing his movers and shakers story. Now, if you want to be the next movers and shaker guest, email me, josh@jakeandgino.com. If you like the show, please leave us a review. And until next time, let's make it a movers and shakers week. See you, everyone.
Thanks, Mikey T.
Yep.
Bye,
Have a good
Josh.
one, guys.